let's take a look at the overall market picture and the sense you're getting in terms of sentiment on the ground and how that's translating into actual activity at the bourse.
Well, a very, very strong dividend year, and investors seem to be very happy. So I think sentiment has been driven mainly by the fact that most companies have given very good dividends. Those that want to grow have opted to put a bonus component in their results so that they can at least free some of their reserves. And so I believe that going forward, we are expecting that this strong earnings growth is going to push the market further.
Let's take a look at some of those earnings that filtered through late afternoon yesterday. KCB, Kenya's largest bank by assets, saying that it grew its after-tax profit by 76%, and that coming as a very big surprise where many were concerned on whether or not KCB would be able to maintain such a positive, strong upward momentum in growth after it's been so involved in an expansion drive.
Well, I think what happened is they raised capital towards the middle of the year. They started the year with a very low margins in terms of core capital to deposits, and that was actually hampering their ability to lend. I think the fact that towards the Q3 and Q4 of 2010, they managed to complete the merger with SNL, which gave them that strength in the mortgage market, which they really needed, and also, you know, a spike in lending. And I believe also with the seasonality of loans, which probably matured towards the end of the year, then that sort of explains their surprise. But basically by third quarter, we were not seeing that much growth, and suddenly there was a huge acceleration, which we are seeing now in their final results.
Let's take a closer look at those results, because we know that the Tanzanian and Rwandan outlets had yet to break even. They've been really struggling to gain that upward momentum and traction as things progress in terms of expansion there. Run us through the kind of progress we're seeing on those fronts.
Well, they didn't mention much about their Tanzanian and Rwanda subsidiaries, probably because they had not yet announced there, and the fact that they are cross-listed on those markets could have some disclosure implications. But I do think that they have seen a bit of growth, especially in Sudan, which was already posting profits before, and I believe that that was probably one of the major drivers.
Taking a look at KCB, I mean, it trades on an inexpensive forward PE of sub 8 at this stage, as per the third quarter release, and many expecting a re-rating around this full year release now. What are your expectations on that front? Are you a buyer?
Well, yeah, I would consider it a strong buy going forward. I believe that investors who are looking for growth would be most interested in KCB, seeing that the price is still very affordable, and therefore we do expect that with their expansion and they're beginning to, you know, increase their footprint in the mortgage market is going to help us to value the stock based on growth opportunities going forward.
Just taking a look at things, Samuel, because the mid-tier banks seem to be keeping up just as well. We had NIC Bank out with numbers yesterday and also posting a 71% gain in pre-tax profit there. Market reaction to that announcement also very positive, even though we saw that share price come back a bit by the close. Your overall impression of mid-tier banks and their ability to compete at this stage?
Well, overall, you find that the mid-tier banks have certain specialties. They specialize in certain areas of or certain core markets, but they are also beginning to expand and to diversify their product mix, which means that they are now actually stepping up a notch in order to catch up with the bigger banks. We did hear NIC Bank announce that they are looking at two countries in the region to move to, and that their Tanzanian subsidiary did do very well well last year, and they have also turned around their other subsidiaries, which include NIC Capital and NIC Securities. So I think that now we are beginning to see the financial supermarket model, or the one-stop shop model, beginning to spill over to the mid-tier banks, and this is what they're actually using to harness to be more competitive and to give investors an all-round package.
Certainly what stands out with that is the fact that we've got NIC as a mid-tier bank managing to see the strong turnaround, swinging into profits in both its Tanzanian and Rwandan operations. So what's it getting right that KCB isn't right now?
Well, I've always wondered where the problem with KCB Tanzania was. Probably the fact that it is tagged Kenya Commercial Bank, but that is just speculative, and maybe people feel maybe it sounds a bit of like a neighboring country's bank rather than their bank. So I don't know if that is the reason, but I believe that going forward we are going to be watching closely to try and find out where that problem is.
Well, these companies seeming to be adequately meeting expectations when it comes to divvy payouts, bonus share issues as well. I mean, NIC specifically issuing a bonus share for every 10 ordinary share held. What are you making of this rising trend?
Well, the Kenyan investor is very, very dividend oriented, and when a company wants to grow and they feel that they need to reserve some of the money in their reserves, then they find it better to give a bonus rather than to release the cash so that investors can pay themselves a dividend if they feel like selling those bonus shares. So I believe most of the companies where you're seeing the bonus shares coming are those that feel that they have a reason to feel that they want to grow in the region, and they need, of course, to release those reserves back into the balance sheet so that they can be able to finance that growth without having to come to the shareholders again and asking for further capitalization, which would mean increased expense, because that would also be an expensive affair for raising capital.
Samuel, just looking outside of the banking sector, Kenya Power and Lighting coming out with numbers early this morning, and H1 pre-tax profit up 7.5%. Your view on KPLC?
Well, first of all, their costs have come down quite a lot, especially with the fact that we had fuel costs going down significantly over that period, and I believe that must have had a very positive impact on their earnings. I think despite the fact that their distribution costs did go up a little bit, the company has also been very, very stringent in trying to reduce vandalism on their lines and on their transformers, which was actually a big problem, and I think that is also beginning to bring out some success. I believe that they are also not servicing the preferential debt that they had earlier, and I believe that I think that is going forward because they did their restructuring quite late in the year. But I do believe that going forward with the expansion and the increased distribution of electricity in the country, then they should see accelerating growth going forward.
Samuel, looking forward to next week, anything specific that you've got your eye on? We know that Equity Bank is amongst those to be releasing results pretty soon.
Well, first of all, East Africa Portland announced a 5% increase, and I've always wondered why they don't hedge their yen loan, and I don't know why they don't swap the loan or hedge it or something, because that has been in their books quite a bit, and I believe that is going to cause investors a bit of worry. On the part of going forward with the financial stocks, we are all watching Equity and Cooperative Bank, because we think that those will also be posting some amazing growth figures, seeing that the stage has already been set. We have already seen increased activity, especially from foreign investors. On Cooperative, on Equity, and on Standard Chartered, we've seen local investors betting on a National Bank of Kenya, which is expected to announce their first dividend, and Cooperative Bank, which seems to have used the money they raised in their IPO very well. So I think going forward, we are going to see banks, which usually are the ones who finance economic growth, giving us 50+% profit growth, and that is very good for the economy. And that means that going towards mid-year and third quarter, we should expect to see then the other sectors begin to accelerate growth as they start to get the returns from what they had been financed by the financial sector.